Okay, good morning. It's another day that God has given us this morning, and we are glad and we are going to rejoice in it. My name is Dr. Justin I.GACHIGO, and I'll be your course facilitator for Accounting Information System. So, just to give you a very simple background about Accounting Information System, so these are the systems that are used in an organization to collect, record, and capture transactions. So, and I believe most of us, if you're not working, you have ever heard of like QuickBooks, Sage, Oracle. All these are what we call the accounting information system. But let's just get deeper into it and understand more. So we are going to begin by getting to familiarize ourselves with the expected learning outcome. So what are we supposed to achieve by the end of this class? Number one, you're supposed to be able to define an accounting information system and explain the functions of an accounting information system. The second one, you're supposed to explain the accounting methods and objectives. Number three, you're supposed to explain the accounting processes. So let us define IAS. So IAS, it is a short form of accounting information system. So an accounting information system is a system that collects, record, store, and process data to produce information for decision makers. So who are the decision makers? They are the managers, they are the owners of the business. Examples of accounting information system, we have one, enterprise resource planning, popularly abbreviated as ERP. And this one, it is an integrated system that combines accounting with HR, sales, inventory, and procurement. Examples, we have SAP, Oracle, and then we have Microsoft Dynamics. Continuation of the example, we have accounting software packages like specialized software focused on accounting and financial reporting. And examples of these softwares, we have QuickBooks, Sage, Tally, and Pastel. So this basically, they are used by small and medium enterprises. Then, what are the components or the makeup of accounting information system? One, it is made up of people. So people are generally the users, yeah, the HR, the accountants, the auditors, the IT staff. Then we have the procedures and the processes. So these are the methods that are used or followed to collect, process, and report accounting data. Uh, Now we have the popular method of collecting data include the journal entry. Journal entry is a source document. We have the payroll. We have the bank reconciliations and financial reporting cycle. All these are the processes. So financial reporting cycle, it starts with the journal entry to the end of the month closure of the trial balance. Then we have the data, and the data, these are the raw information. The raw information includes financial and non-financial information, which is captured and stored in an accounting and information system. Example of this information include the sales transactions. These are financial information. Invoice, this is the financial information. Supplier order, the financial information. Payroll record, these are non-financial information. Inventory balance and tax filing. So those are financial information. Then the other component is the software, and these are the applications that automate tasks and process data and generate report. Examples of this, we have the QuickBooks, we have Sage ERP, we have Oracle, we have NetSuite, Sage 300, Microsoft Dynamics, and Zero. Of course, there are more. These are just examples. Then we have the IT infrastructure, and these are the hardwares and technological backbone that support the accounting information system. And this includes servers, laptops, cloud platform, networks, and backup system. Then we have internal control and security. And these are safeguards that ensure accuracy, prevent fraud, detect errors, and protect the data. So this includes the password protection, access rights, audit trail, two-factor authentication, and segregation of duty. So the password protection means that you cannot be able to log in into an accounting information system if you don't have the password. And as you advance, you come to learn that the password are of particular complexity. That is, it is not easy to memorize, or somebody cannot easy to guess. Then we have the access rights. There are some uh, components of IAS that you cannot be able to access. For example, if you are in accounts, you may be deterred to prevent some, you may be deterred to access maybe the payroll, which is a reserve for HR. Audit trail, this means if you do a particular activity, for example, you post a journal, yeah. So when it is being pulled out, when that journal is being pulled out, it will come out with your name that it is so and so who did X, Y, and Z. Two-factor authentication, it is whereby you need a password, and you may also need an OTP to come to your mobile phone so that it will authenticate that you are the one who have logged it. So if someone has your password and don't have your mobile phone, they may not be able to get into the system. Then segregation of duty, this is where we have different people performing different functions. For example, in accounting, we can have account receivable. Account receivable cannot access account payable. Account payable cannot access procurement module. Procurement module cannot access any other or the other modules as we have indicated like that. So this is a pictorial of the component of an accounting system. So we have talked about the people who are the users. We have talked about procedures and instructions. These are the methods that are used to capture and collect the data. We have the data. We have said this is the raw information, and it includes financial and financial information. We have the software. These are the accounting software that are used. Like we have talked about QuickBooks, NetSuite, SAP, etc. We have the IT infrastructure. This one we have said these are the servers, the laptops, and other hardwares. Then we have the internal controls, and these are the measures of the safeguard that prevent circumvention or unauthorized access or unauthorized activity. And this is a very popular question in an exam where you are told to describe the component of an accounting information system. So please take note of that. Then we have the functions of an accounting information system. The function one, it is data collection and recording. So that is capture financial and non-financial transaction data from source document. Examples, we have invoice, receipt, payroll record entered in the system. Then we have data processing. This classifies, summarizes, and processes data into a usable information. Example, we have posting journal entries into ledger automatically. The other uh, function is information storage and management. Store transaction and financial data securely for future retrieval and analysis. Example, database holding historical financial records. So database can hold a financial record for more than 5 years or even more. Information reporting, this accounting information system produce report for internal use. For example, management reports, budgets, and external user financial statements, like even the tax report. Then another function is the internal control and security. It protects against fraud, errors, and unauthorized access. Example, we have talked about the access rights, audit trails, and system checks. Then we have supporting decision making, and this is to say that it provides timely, accurate, and relevant information for managerial and strategic decision. Example, profitability analysis, cost control, and investment appraisals. Then we have integration with other business functions. So this link with HR, procurement, sales, and inventory system to provide a holistic view. Example, we have integrated ERP system. Then we have compliance with standards and regulation. This ensure reporting for accounting standards. Yeah, so those are the functions, the major functions of accounting information system. Data collection and store and recording, where you capture the information. it processes the data to usable state. For example, when you post journals, those journals, um, they post automatically in the ledger. Storage of information and management, information reporting. You can pull TB, you can pull management reports like P&L, balance sheet, cash flow. You can pull other reports like statement of like financial statement, which is for shareholder reporting, the tax report to report the tax authority, internal controls. Yeah, it protects people not to access what they are not supposed to access. Supporting decision making. For example, if you can be able to put a report on profitability, cost control, and investment appraisals. Integration with other business function. This IAS is normally integrated, as we have said, with the HR, procurement, sales, inventory, etc. Also, the final one is the compliance with the standards and regulation. You find that most of this accounting information system, they are configured in such a way that they are already compliant with the requirement of FRS and GAAP in terms of capturing information and even the reporting. So, what are the benefits of an accounting information system? One, it improves accuracy and speed of financial reporting. So you can imagine like um, traditionally, or not even traditionally, earlier on, before the evolution of this ERP, yeah, accountant used to capture this information in ledger folio manually. It was a lot of work. Enhance data decision making with real-time data. So with this evolution, especially for the cloud system based ones, you can be able to access information wherever you are. If you are the CEO, by just a click of a button, you're able to know what is the cash balances, what are the sales, what are the receivable balances, what are the table balances, what are the fixed assets, what are the stock balances, etc. It also strengthens the controls and reduce fraud. So as we have talked about unauthorized access, ensure compliance with FRS, GAAP, and tax law. We have talked about this system. They have the modules, and they are even configured in such a way that they are compliant to these reporting standards. Also, it increases efficiency through automation and integration. So because of the various processes are automated, so the chances of errors are minimal. Then let us talk about the accounting methods. So accounting methods are the approaches used to record and report financial transactions. So this approach include one, we have cash-based accounting. So this record revenue when cash is received and expense when cash is paid. So this is not very common, especially in Kenya, because in Kenya we normally use the accrual basis accounting, and this one is where we record revenue when earned and expense when incurred, regardless of cash flow. So we normally capture this one. Um, in Kenya, we normally capture revenue regardless of whether it has been paid or not. And even this is in compliance with the tax law, which is that you need to pay taxes on the earlier of, you pay VAT on the earlier of either invoice, delivery, or payment. So then we have the hybrid. This is a modified cash basis. So it's a combination of cash and accrual basis. So whether you receive cash, you record the revenue. Whether you receive revenue first before cash, you still record. And the expenses the same. If you incur an expense, if you have paid, you still capture. If you have not paid, you still capture it in the system. That is what it means. So there are only those three: cash basis, uh, that is, you record revenue when cash is received and expense when cash is paid. Then we have the accrual basis. This one you record revenue when earned and expense when incurred. And then we have the hybrid or modified cash basis. And this is a combination of cash and accrual method. So let us look at the objective of accounting. So one of the objectives of the accounting is to recording of transaction, that is keeping systematic record of financial activity. Yeah, so that is the major purpose of accounting actually, to record information. You need to record sales, you need to record procurement, you need to record uh, stock levels, you need to record payroll things, everything you need to record as far as accounting is concerned. The second one is determining profit or loss. So in a business, you need to determine what have you sold, what cost have you incurred, so that you can know your profit. Then is determining financial position. This is to show the asset that you have. For example, motor vehicle, furniture, equipment, etc. Liabilities, if you owe suppliers, if you owe bank, equity, that is the money that you initially invested in, plus the retained earning. Then providing useful information for decision making. This is to help manager, investors, creditors, and regulators. Then ensuring accountability and control. That is track resource and ensure responsible use, compliance with laws and standard. That is follow IFRS, GAAP, tax laws, and statutory regulation. The other one is facilitating planning and forecasting. So it provides data for budget, cost control, and future strategies. Then safeguarding asset, that is to ensure proper valuation, control, and protection of asset. And finally, supporting audits, provide verifiable record for internal and external audit. So you can be able to pull the information from an accounting system so that you can give to the auditors as a proof of the transaction. And especially these days, it has become so easy that most of the ERP, you can even attach. When you are posting a journal, you can attach the support. So during the audit, you just give the auditors the view on light, and they can be able to pull all the information that they require. So now let us look at the accounting processes. So the accounting processes is a systematic procedure of identifying, recording, classifying, summarizing, and reporting financial transactions. It transforms raw data into useful information for decision making. So what are the steps? So the first step is identifying a transaction. Yeah. So you identify a transaction. Is it a sale? Is it a purchase? Is it an expense? And then you prepare the document. If, for example, it's a sale, you prepare the output of a sale is one invoice, the sales invoice, and the receipt. If it's, for example, an expense, it's a payment voucher. If it is a inventory that you have received, it is a GRN, good received note. Now, then the next step is to record or what we call generalizing. Yeah. So generalizing, and this is recording transaction in the journal in a chronological order. Chronological order means if you have now like a journal book, so you normally abbreviate journal as JV. So you have JV1, JV2, JV3, JV4. So and now these JVs are the ones which are thought even for supporting the audit. So the output for recording journal, these are the general journals. Then we have the posting. Now posting, it is transferring now those journal entries to ledger account. So now those JV1, when you post it in the accounting system, then now the output is what we call now the general ledger. Then the other step is preparing the trial balance. So a trial balance, a trial balance is a summary of the general ledgers from sales, expense, assets, liabilities, and equity. Then the other is adjusting entries. So these adjusting entries, um, these are the end of the year or end of the month adjustments. For example, accruals. Accruals, these are the invoices that you have not received. For example, you know very well that you normally receive Safaricom invoice at the end of the month. So if you have not received that Safaricom invoice, then you need to accrue, because of the matching principle. Then prepayments, these are what you have paid in advance. For example, insurance. So you need to amortize appropriately. Then you have the depreciation for asset, and the output is adjusted share balance. So the share balance is not adjusted. So when you adjust, it becomes adjusted share balance. Then the other one is preparing financial statement, and this is summarizing into reports, income statements, balance sheet, cash flow statement of or equity statement. So the moment you have the adjusted trial balance, then you can prepare the financial statement. And we have four primary financial statements: the P&L, balance sheet, cash flow, and the statement of changes in equity. The other one is closing entries. So closing temporary account, close temporary account, that is revenue expense to the retained earning, and this is post-closing trial balance. So what normally happens is that at the end of the year, you normally learn the end of the year procedures, and when you run the end of the year procedure, all the periodic accounts, that is the profit and loss, all of them they net off to the retained earning. And that's why we normally use in the income statement, we normally use for the period, but for the balance sheet we use as at. For the period, it is a particular period from January to December, but as at is when the account was initially opened, or when the company was initially opened. Then we have the reversing entry, which is optional. So reversing certain adjusting entry at the beginning of the next period. This simplifies the recording in the next cycle. So the reversing entry. So sometimes you may find that there are some entries that you have captured. Let's say salary revenue. Salary revenue, these are unbilled revenue which you accrued, and you need to reverse it. You know, so before the next cycle. That is what we call the reversing entries. And this is now the visual representation of the accounting processes as we have just explained. So now that brings us to the end of this particular lesson. It's a short one, but it's it's a relevant topic. So these are the topical sample exam question. So you may need to look at this question, discuss among yourself, reach out to me if there's something that you don't understand. I'll be more than willing to assist. Otherwise, I will share this recording with all of us. If you need any clarification, please reach out. I'm here to facilitate you. Thank you all and have a good day.